Hello, it's Roland Mills, a classically trained opera singer and former starving artist. Welcome to my channel. I am here to inspire you to make money and build real wealth. So subscribe for more personal finance conversations like this one. Today, I have a little warning to my friends out there who may have watched my other videos, got their 4 free stocks when they signed up for Webull using my link in the description, of course, bought shares of Tesla and NIO, and are now looking for the next big stock to buy. By the end of this video, you will understand why Tesla is not normal, what realistic expectations you should have around investing, and how to avoid getting burned and losing all of your hard-earned money. Quick disclaimer, I am not a licensed financial advisor. I'm just an opera singer on YouTube sharing what information has worked for me in the hopes that it will inspire you to grow your wealth as well. Before we get started, I'd greatly appreciate it if you would just lightly tap that like button. It helps to spread the word to other people like you. Also, subscribe and hit that notification bell thing that's probably right in front of my face so you don't miss out on future tips I'll be dropping along the way. Alrighty then, let's get into it. Just so you all know, I am a huge fan of Tesla. That stock is the biggest portion of my portfolio. If you're watching this video, then chances are many of you have hopped onto the Tesla train, bought shares of Tesla, and now find yourself addicted to crazy growth stocks. At the time of this recording, Tesla's share price has risen over 814% in the past year. In that same time period, NIO stock has risen over 1,602%. I'm sure by the time you have seen this video, these stocks will already have seen even more growth. These exciting numbers are enough to tempt anyone suffering from serious FOMO to jump on the bandwagon and pick up a few more shares. Though I personally believe both of these stocks would deliver unreal growth to long-term investors, there is a hidden danger here. People can start to expect this growth with all stocks. Tesla is not normal. No. Many Wall Street analysts can't seem to wrap their head around Tesla's meteoric rise. Many YouTube personalities have chastised them for not seeing what is so very clear to the rest of us, that Tesla will rule the world. Just kidding, kinda. The reason these analysts glitch when it comes to Tesla is that stocks do not usually grow this much. Over the last 10 years, the S&P 500 has grown an average of 13.66% per year. Before the world started seeing big tech companies take off, 13.66% growth would have seemed amazing. As new investors seek to diversify their portfolios, instead of seeking good growth stock mutual funds or ETFs that come diversified so there's less risk, everyone is out here in these streets looking for the next Tesla. Not every stock needs to give you Tesla-like returns in order to be a good investment. I also own mutual funds and a few ETFs as my safety nets. You might see videos entitled 10x your money with such and such penny stock and rush in hoping that you won't miss out. Realistically speaking, the majority of these high growth penny stocks will fail. There was even a point just a few short years ago when Tesla themselves considered bankruptcy, and Elon Musk even sought to sell Tesla to Apple. Heck, without the intervention of the Chinese government, NIO would have gone under by now as well. When doing your own research for the right company, sure, you might start with a casual stroll through YouTube where you'll encounter my lovely face just gushing money-making tips, and that is a fine starting point so long as you gather multiple opinions, research the company on your own, and find that company's investor relations page where you can listen in on past earnings calls and review their financial statements. I'll make a video detailing how I break down a company's financials in another video later this week, so subscribe so you don't, miss out. There is another problem with getting used to high growth stocks. Say you've bought a solid chunk of Tesla, and every day you look at your phone and you just keep seeing 5 to 10% increases every day. What happens when that stock temporarily drops and stays down for a month? I mean, Tesla traded sideways for like 5 years. Don't panic. Do your research to be sure that nothing fundamental to the company has changed. Most people addicted to constant positive growth might assume something has changed and sell hoping to cut their losses. That's dumb. You don't lose or gain money until you sell, so just wait and ride that roller coaster back up to the top. As Dave Ramsey says,
I lost all my retirement when the stock market went down. You ever hear somebody say that? Let me help you with this. That was a lie. I know in their emotions they felt like they lost all their retirement, but if your 401k were invested in good growth stock mutual funds, the worst time in the history In the last 50 years, since the Great Depression, the worst we've ever had was 2008. The stock market dropped from the Dow Jones Industrial was about 13,000, dropped to about 6,500, basically in half. And so that means if you had $100,000 in retirement, it became worth 50,000. Did you lose all your retirement? No. Did it go in half? Yeah. Does that suck? Yes. But you didn't lose it unless you cashed it out. It just went down. Oh, by the way, did it come back up to 13,000? Did you get all your money back? Yeah. Is it above 13,000 now? Yeah. Try over 20,000. Yeah. That's your Dow Jones Industrial Average. So look at those percentages. It went down in half, and now it's almost fourfold what it was at the bottom. So your 50, if you had 50,000 at the bottom, your 100,000 becomes worth 50, should be worth 200 now on stock market averages. So you didn't lose any money at all on your retirement unless you put it in at the highest point and took it out at the lowest point, which makes you like the world's worst possible investor ever. I mean, you bought it exactly the wrong time and you sold at exactly the wrong time. And then you did lose half of your money, but you didn't lose all your retirement money, lost half of it. And the only reason you lost it was no one gets hurt on a roller coaster except those that jump off. Ride it to the end.
In my past videos, the only single stocks I've covered have been Tesla and NIO. Well, I also covered Poshmark, but that was specifically in terms of pairing that with my other side hustle idea. Besides that, everything else has been about index funds and ETFs. That is by design. I buy shares of managed funds to build my solid base, and then I invest extra money into Tesla and NIO. That way I mitigate my risk. If you're ready to start your own investing journey, here's some juicy info for you.
Alright guys, this is Webull. If you use my link in the description below, you can get 4 free stocks. Webull is a self-directed brokerage app that helps you to research and execute trades in the stock market. It's free, like no money at all for commissions on trades, for contract fees and options trading, and to manage the account itself. Right now, if you open up a Webull brokerage account, between now and the middle of this month, you get 2 free stocks valued up to $250. If you then make your initial deposit of $100 or more, you'll receive another 2 free stocks, each valued up to $1,600. That's absolutely free money and the best investment advice I could give you right now.
Just to summarize today's video, don't be dumb. Should I end it there? Nah. Don't get so jaded by the incredible run Tesla and NIO are having that you only search for high risk, high reward gambles. Lower your expectations because Tesla is not normal. Before you buy any stock, research the heck out of that company first. Don't buy what you don't understand. If you do, you have a high chance of losing everything. Generally speaking, the higher a stock's potential growth, the higher that stock's potential risk. So balance it out with mutual funds, index funds, ETFs, etc., etc. If you buy a stock and the share price plummets, read the most recent news on that company. If something hasn't changed fundamentally, just stay the course. The stock market fluctuates up and down, but generally speaking, rises over time. Just sit back, do nothing, and read a good book like this one, written by my beautiful wife, Jessie Marie. I've left the link below in the description if you're curious. Well, that's the end of today's video. I hope you found it educational and entertaining. I'll eventually monetize this channel just so YouTube will blast it out to more people, but I really am not doing this for the money. I'm doing this because I truly believe that there must be a way for artists like myself and my friends to create without becoming starving artists. Stay tuned for more personal finance tips, reaction videos, and stories from my days as a performer in the future. In the meanwhile, feel free to follow me on Instagram and comment down below if there's a topic you'd like to see me tackle next. Till the next time, I hope you all keep creating and spreading love through your art. That's something that money cannot buy, and it's the best part of the human experience. Much love. Bye.